And here we are back again. First of all, thank you everyone. The YouTube channel just got a YouTube partner, which I'm very, very happy about. It's a big milestone for me. And yeah, thank you everyone for helping me to achieve that big milestone. And yeah, let's keep pushing forward. As always, please post in the comments below the good things and the bad things, what you like, what you don't like. Then we can have a discussion on how to get better, both for you as a viewer, but also for me as a presenter to you guys. So yeah, big week for uranium. Some stocks tanked big time. We will look into those at the end of the video. But overall, let's have a look what happened to the URA, to the spot price, to the miners, some ratios. We will have a look. We will mostly look at the weekly chart, just to get a broader view on where we are and minimize all the noise that there might be on a daily and lower time frames. So where are we? Remember, this is log scale that I use. You get a slightly different view if you go to the nominal scale or regular scale, but log scale is what I have been using for the past 2-3 months maybe, and I find it way better. So yeah, with that out of the way, let's look at uranium, URA. Where are we? What I'm noticing right now is, yes, we have broken out of the golden trend line here coming down. But also right now we are getting sellers. You know, when we get above the 22, we're getting sellers pushing back the weekly candles. And basically we need to break out above the 23 or the 22.6 more or less. It still seems that there are many sellers here, as you can see the wicks here on the weekly candles. So we need to get to break above here before we can really start to get things going. But yeah, so far no success, and we have to wait until the break. It is what it is. But a decent week, even though we closed below the 50% of the candle, it's all right. We had one day, Tuesday, with a very big red candle, and I also wrote that on Twitter that I didn't like the candle, mainly because of, let me show you what I was looking at that point was this right across right here, where we actually dipped below this blue wedge right here. Dipped below. What was very good this Friday or yesterday was that we popped back up again and back in. Very positive, but still, I need to see us break out to the upside here. And until then, we just have to wait and see. Yes, I know it's boring. It is what it is, but I can promise you when we break, it will not be boring anymore. That's for sure. So yeah. Okay, that's URA, URNM weekly, a bit different beast, still quite same. This is a 100% pure play uranium ETF. We still haven't broken out compared to the URA, which we have broken out of. And as you can see, similar things here. We are having wicks here at the top of into the resistance, the golden band here. We have the spinning tops, well, not spinning tops, but we have large wicks to the upside. So indecision on the weekly as well. Again, we have to break above we have the wick high here, I know, but maybe, excuse me, but maybe we can go below and say that if break above 35 now, then we actually have a big breakout. Still, we are in the squeeze, nothing is happening. And again, when and if the squeeze breaks to the upside, that's when I will get very excited, and you will also be seeing me more excited about the uranium market. But for now, I have to say it as it is. It's still in one big squeeze, and we cannot celebrate anything until we hopefully break to the upside. And when we do, I will be the first one to be excited. I can assure you that. What is good is the weekly chart for the uranium spot price, or the U.UN spot physical. You can see here one big weekly green candle. I love it. Getting back above the long-term red resistance. A bit dip here below, and then we're back above again. Very constructive, very good. And now we just need to see what the next week brings. But getting above the red overall long-term here, that was very good because we dipped down below again. So I like that very much. Yeah, let's look at some minors just very quickly. We have Denison Mines. Again, we are still below. There it is. I don't know why it was changed. We're still below here. We have broken out, which is good. Here we had a false breakout all the way back down to the lower band again. Again, if you see a false breakout to the upside or the downside, often you visit the other band, or the in this case the lower trend line, which we did, and often you actually see a breakdown or follow through. But here we actually got back above again. Now we're just waiting in this big cluster of weekly candles, and we need to get back above the 1.75 more or less on a weekly basis. Then Denison looks really, really good. But as you can see here, given this one and the horizontal, we are close. But let's see if we can break to the upside, or we have to go all the way down again. But still, again, it's a bit boring to say this every day, every week, let's say, but still, that's what happens, right? We have been in a 2.5 year long consolidation phase, so it is what it is. Can Alaska, just want to show you that Can Alaska is coming down to a very important trend line here at 0.27, more or less. You have it all the way across the breakthrough, the retest, and now we are in this squeeze right here. Hopefully we return to the upside. We will just leave it at that. But until then, we are in a downtrend. What's very good is the Cameco chart. Just look at this chart compared to all the other miners, which has basically barely broken out. Some are still waiting for the breakout, but Cameco is an absolute beast. And we actually broke out into, what's this, 13-year-long all-time highs this week, closing at the end or at the top of the candle. Beautiful. We had the breakout here, and now we are just continuing. Cameco is a beast right now. What's good is that if Cameco goes higher, then it should pull all the other miners up as well. The bad thing is that for the past year or less, let's call it 1 year, half a year, it has only been Cameco that has been going up. So if Cameco loses steam, let's say, and starts to turn down again, the other miners will get beaten to, they will get hit a lot because they have underperformed so much. And when you have the blue chip correcting or going down, yeah, that will not be a good scenario for us uranium bulls. Mega uranium. Oops. I will say this, I haven't been looking at the charts for a long time because I was on a mini holiday with the family. But this is good to me. Let's go to the daily and see. Yep, it's fine. We had a breakout, retest a bit, dip below, totally fine. And now we're hopefully resuming again. So look at this one here. We'll just mark it for the next weekly wrap up for uranium. Looks good for mega uranium. Looks good. Energy fuels still in the squeeze or in the long-term consolidation. I have noted this head and shoulders because it is visible. If you go to the daily, you can see it more clearly right there. So hopefully we can negate it. But yeah, we will have to wait and see. Getting below, obviously, then we have the golden trend line to hold. But again, it's getting more and more thin the further out into the apex you go. So yeah, energy fuels could be better. What's looking really, really good is the FCU, no, FUU, excuse me, the darling of all uranium investors right now. I bought this last week, or I added into it this Tuesday, I think it was. Yeah, I think it was Tuesday or was it Friday? I can't remember. The reason why, quite simple actually. As you can see, we broke out here and then we flagged into the retest. That's always a pattern that you want to be looking at. And what's even more textbook is if you have a look, as you know, we have the first lower low, second lower low, and the third lower low was the exact retest of this long-term trend line. Beautiful. And now we are breaking out. So this was my last clip for this specific stock. And yeah, this just needs to go higher. It really does. It looks absolutely beautiful. This is one of the most bullish charts, I would say, in the uranium space right now. The FUU looks really good. And yeah, the good thing is that you can place the stop loss very neatly here. Let's say that everything goes bad and we get below here again, you can easily get out somewhere here at around 0.35, depending on how you want to go. Quite easy to do. So yeah, looking absolutely fantastic. UEC also been doing all right, I would say. And my focus is this golden trend line again. Also, excuse me, we have, as you can see here, just to show you guys, we tested the golden trend line here, corrected, and now we're going in again. And the big bullish case right now is to get back above let's call it 3.5, just to give it a rounded number, 3.5, getting out of the long-term golden correction here and getting back above, confirming the breakout right here, at 3.47 to be exact. But still, this can rip to the upside very quickly if we get above there. Laramid, LAM also breaking out today, this week actually. Big weekly candle. I love it. You know, breakout here into the apex. 1, 2, 3. Lower lows, breakout. Beautiful. Textbook. I mean, if you can spot these, this is basically an Elliott wave. But if you have the first low, second low, third low, and a breakout, that's beautiful. But what it actually is, you know, a big 1 to 5 Elliott wave correction. You also get them to the upside. You can get them horizontally. You can get them in very different ways. You can also see here, just to show, you have again 1, 2, 3. This was the March 2020 disaster. But yeah, you can find them all the way around. You can also find them to the upside in most cases. You just need to look at charts and find them. Then you can see them very quickly. So yeah, again here to the upside, 1, 2, 3. So 1, 2, 3, 4, 5. That was just a big of a quick take on that part. Anyways, EU, the Encore Energy, have broken out into the big resistance at 3.8. To me, making a inverted head and shoulders upon the retest, and now we're going higher again. That's my view here. This is the right shoulder, and there we go. Looking absolutely beautiful for now. Nothing much to add to that one. Find very quickly, still in the long-term correction here. If you look at it again, 1, 2, 3, and again, if we get the breakout here, it's textbook. So looking good. I would have preferred to break out earlier to show that the bulls are in more control, but yeah, it's still fine. It really is, as long as we hold this low right here at 0.335. Okay, looking at some ratios. Again, this is the URNM divided by the spot price. And what we really want this to do, obviously, zooming in here, is to get above this resistance line right here. As you can see, this is this golden right here coming across 4 and inverted head and shoulders right there. When we break this one, that's when and if. Okay, nothing is certain, but if we break this one to the upside, then that's where the uranium bull market continues for the next leg up. You can see we are here at some pretty vital lows. So this zone right here, very important, as I have been talking about for the past 4 months or so. So let's hopefully see if we can break here within the next few weeks. URA divided by XLE. This one was the doodles that I made here when we broke down. So for now, it's actually quite, I still like it. You know, we have the exact trajectory, and hopefully it will curl up as we talked about previously, meaning that the uranium minus URA is outperforming XLE and breaking out of this long-term golden right here. Would be nice to see. So yeah, it's also, never mind. Looks good. We will not talk about that ratio. This is the XLE to the SP 500. We are at a long-term golden trend line here, just to show you. It started right here, all the way up, and we bounced right into it as we discussed would probably happen, and it did. And hopefully we are breaking to the upside and having XLE, the energy sector, outperforming the SPX, again, fueling the uranium market. No pun intended. Still, we have the 1, 2, 3 lower lows into the bullish bull flag, or the bullish channel. It's nice. It's really nice to see. XLE to URNM. Again, yeah, let me just clear the past stuff here. We broke down, meaning that URNM is outperforming XLE. Now we're having a bit of a pushback to the upside here. But again, I think we have broken this one, so it should resume down at some point. Depending on how high we go, we can go for a full retest maybe. But let's see what happens. Okay, that were the ratios. Most of them are looking very good. Still waiting. It's boring, I know. Global Atomic had a terrible week, and yeah, it was the news regarding Niger and the coup there with the government and so on. I posted when we started to break down. As you know, I have been talking about this bear flag here for quite some time, that I didn't like it. I didn't know why this chart, Global Atomic, was bear flagging compared to others that were squeezing much more bullishly. But obviously, what I didn't know was the Niger situation, and it all accumulated all right here this week. And we had a big pop down here. I posted that on Wednesday, was it Thursday? I can't remember. Tuesday, excuse me, doesn't matter. But still, that if you want to get in, you could be buying here at this, the touch right here. I called it 0.8. Still almost to the tick. I'm not calling that this is a done deal, right? That this is the low. But to me, if we were getting all the way down here, you could have the possibility of the 1, 2, 3 lower lows or impulse lows, and it would just make good sense to buy here in this range. But yeah, obviously anything can happen. But the stop loss is quite easy to place at around 0.723, depending on how much room you want to give it. But still, a buy here is it makes sense. It made sense in my view anyway. And we did touch it more or less to the tick. Well, 0.75. So I'll take it. I will take it any day of the week. Global Atomic, excuse me, GXU, GoVX. Similar situation with the Niger news of the situation in Niger. We are still in this wedge here, and let's see if we can break to the upside. To me, it looks like it wants to make a big puke down, actually, only to go up again. And the reason is that this long-term bad boy comes into play right now. Obviously, if we didn't have this red weekly candle, this blue trend line here wouldn't be of any significance. But now it comes into play to get this huge drop from 0.11 more or less down to 0.06, so a 50% drop. It's a big one. But still, let's see what happens. Maybe we hold here. As you can see, we are long-term into, oops, right here, you can see it, right? Long-term into, excuse me, but it's because trading we have changed the symbols. Some long-term support here. Maybe we hold. We have the 1, 2, 3 lower lows. Yeah, I don't know. Let's see what happens. It's a tricky one. Anything can happen when you get this kind of frustration or panic. But yeah, let's see. Okay, that's all I had for today for uranium. It's again 1 week with a whole lot of nothing, basically. The only one that did really well was the Sprott Physical Uranium Trust. Anyway, as I said, in a few weeks' time, I think we will have a much more fun analysis and a confirmation of the breakout. I really do believe and see that in the chart right now, until proven otherwise. So let's stay tuned. Have an awesome day, an awesome weekend, and we will see you next week. Bye.